Not because I'm putting anybody down, but it's like when it comes to investing, a lot of us, because of we're afraid or we don't feel like we're worthy of having wealth or being investors. Maybe I don't have enough money or I don't know what's going on, stuff like that. It causes us to be very timid. You know what I mean? Because I pay attention. I look at how much we'll spend at a Beyonce concert or how much we'll spend at the mall. Or how much we spend on Christmas every year or whatever it is, so we can go to Walmart and get the midnight special or whatever, and then I compare that to what we put into our investments. And I think sometimes there's a difference in scale. Like I'll see someone that will put $1,000 into something over here, or be paying $700-800 a month on a car note, but then when they invest, they're literally investing like $20 at a time, right? You see what I mean? And so I don't have a problem with your car note. I just kind of don't understand why you're not as just as confident investing for yourself as you are putting money into this car, which we know that money's going down the toilet. We know where that money's going. It's not going to add to your wealth on any level because a car is a depreciating asset. Cars Buying the car before you make the investment is an absolute wealth killer. And there are millions of people that have the car, but they don't own the stock. I don't care if you own the car. I just need you to own the stock while you own the car. Do you understand? There's just a priority thing, right? So don't if me calling it a low self-esteem is affects you in some negative way, just don't assume I'm trying to do that. That's not what I'm trying to do. I want you to be confident. I want you to be I want you to eventually become what's the word, passionate about your wealth. I want you to be assertive. Like, no, this is what we're doing. We investing. We are investors. That's what because that's where wealth comes from. Okay. All right. So next question. Yeah, put your question in the Q&A section. That way I'll see it. Next question I see, Jen. Any thoughts about XLP and IYC? XLP and IYC. I don't know either one of those. XLP and IYC. Let me see. I can tell you what I think. XLP, isn't that a crypto or something? Or maybe I'm getting it wrong. I don't know why I keep feeling like XLP is a crypto. I know, or maybe an ETF or something, like an energy ETF or something. Um, all right, let me see here. Okay. XLP, yeah, okay, yeah, consumer staples select sector ETF. Um, okay, that's dropped. Oh my gosh, it's down quite a lot. I think XLP though is based on consumer staples. So that's kind of a boring place to put money, but it tends to do okay long term. It would probably hold up quite well during a recession, but my interpretation of XLP is it's a more conservative investment. And one thing I'm noticing about it is that it doesn't look like it did very well during this year, which was a really strong year. Um, now IYC has done better. The last 6 months is now that's interesting. So XLP has lost money in the last 6 months. IYC has made money in the last. That's so crazy. So let's see. XLP tracks consumer staple sector, companies that sell food, household goods, personal care, etc. Um, Okay, and the IYC tracks consumer discretionary. Okay, companies selling non-essentials like retail, entertainment. Okay, I get it now. Okay, so IYC focuses on the stuff that's not essential, like people wasting money on entertainment, retail, spending, cars, travel, etc. And apparently, people have done a lot of that this year, which isn't a surprise because the stock market's been doing so well. The consumer staples sector would probably be one of those. Flight to quality issues, meaning that once the ship starts sinking and once the economy starts going south, that's when you start seeing assets like XLP do well. I imagine they do well during periods of economic uncertainty, stuff like that.